Right, good evening. This is Ken Long from Tortoise Capital with a review of the weekend trading report for February 7th, 2015. We have a market that is in bullish normal conditions. On an annual basis, using weekly RSI 14, we're at 55 out of 100 in the middle of neutral. On a 10-day basis, using the 10-day NDX, we're at 82 out of 100, so slightly overbought. No change to the blended monthly rebalancing holdings. That's scheduled for on or about 1 March. These are the current holdings. And then this set under current leaders are the ones that are in a leadership position as of the close on Friday. In ETF2, the theoretical exposure is at 80%. The model portfolio itself will be at 80%. It's adding a position in South Africa, EZA, and then the Schwab Broad U.S. Market, SCHB. That's a pretty liquid ETF that is a market cap weighted exposure to the entire U.S. market, so it gives you large, medium, and small in a single symbol. Looking at the market mosaic, price relative to the 200 is 4.59%. That's yellow bullish. So we drifted down into sideways for a couple days on Monday. It's possible. You may be right on that, Lise. I think you're right. I think I changed that on the second issue, but I didn't go back and fix it. So, yeah, XOU, TLT, and IYR. I think you're right. Slope of the 50 is flat at 0. ADX at 16.5 is neutral, no trend at all, untrending. The good news on that is that a trend can develop in either direction that can last a couple of weeks because of that low ADX reading. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the threshold between risk on and risk off. We are right at that level. That's 1.0, so we are risk on. That gives us a normalized score on the risk Z of minus 0.03 standard deviations. We get that by computing the risk index of the last 5,000 days and take today's reading at 1.0 and compare it to that. That gives us the average and the standard deviation. And then we compute the Z-score of that, then display that as this 90-day histogram. And you can see that the volatility has been slowly getting slowly squeezed out of this market right now. The fact that we have 2 higher lows and it's come back to the 0 line suggests that what we have here is a failure to fail further, and that's been favoring the long side. It's been a grinding move, but I still take that as a favorable sign. Quick look at the blended monthly rebalancing leaders. Most of them are now on a cash position in a 13, and 2/3 of them on the ETF 32. Still, the internationals are still lagging well behind the U.S. I think it's a temporary condition for the alternate asset classes like income and real estate are ahead of the equities, and you can see that the defensive plays and the equities are in that close position behind those leaders like staples, discretionary, and healthcare. This is from the ETF Max. China, biotech, retail, home builders, semiconductors, more biotech, and then China financial. So there's some selected internationals that are doing pretty well, but still being dominated by a lot of REITs, as you can see. So real estate is still strong. Just a quick look at the top 40 members of the S&P 500 using that same lens and the sector spider that they are a member of. So Hospira should be on our short list, along with Electronic Arts and L Brands and Whole Foods. You can look at the performances they've been kicking in. New to the list are going to be things that are green and then white. So we would be well served to take a look at Frontier Communications, Harman International, Biogen, Bennis, and even Amazon. This is the market health check for the last 4 months. These vertical blue lines are 10, 20, and 30 days and 60 days of look back. The horizontal purple line is the price target. While it's in the channel here, this is right around the top of the river. I really need to see a price above 207 to close and hold. You'll recall last week this time we were looking at the channel and wondering if 199 would hold. It has. Those two support levels here at 199, 197 have held. And the market did is exactly what should not surprise us, and that is move right to the top of the channel and then hesitate a little bit on Friday. And so we're still locked in this channel sideways right here. You can see the river, which is the dark blue shaded area, 30-period Bollinger Band plus or minus 1, and the floodplain, the lighter blue shaded area, plus or minus 2. Everything is exactly sideways. You can see that the dragon, which is this pink looking ribbon, which is the 10-period Bollinger Band plus or minus a half, everything's stuck right in the middle of the channel, and the channel going sideways and stable volatility. That's a sideways quiet channel. You can see the 200-period moving average moving up. To put the question to the equities, are you gonna go or are you gonna fall? And the this is the 30-period regression line slope, this sine wave looking thing. The blue circles are where it crossed the zero line and went negative or positive, and then the extreme moves. You see it dip just into the negative zone here that is now improving on its way up. This black line in the middle is the 30-period regression line lagged by a day. Then the RAF regression channel formed by the maximum excursion. This is the 10-period channel. That's been generally up. The 30 is starting to slope up, as we've seen. If we can get above 207, this is the third test of 207. We'll get above that, and then above 209, we're right back into all-time highs. And some of the panic that we've seen from this sell-off at the end of December, and then these sell-offs here in January, hasn't really penetrated out of the yellow zone. This has all been market noise stabilizing at perhaps a support level. This used to be a target, now it's a support. And so I would take breakouts above this as being a very favorable sign. And we're going to see that a lot of the defensive plays this week have been cashing their profits, and looks like money is rolling over carefully into the equities, followed by a pretty good week in energy and oil as well. So perhaps the end of the world isn't coming on the back of cheap oil. Looking at the world market model, 8 of the 10 indexes are on buy signals. Therefore, we're at 80-20 in the theoretical model. The S&P at 70 is still better than EFA at 60, so it's U.S. versus the world. Inside the U.S., it's technology at 71, large cap 70, mid cap 66, small cap 64. Two strongest sectors are U.S. tech and then emerging markets. The two weakest sectors, Latin America and Asia less Japan. Inside the U.S., the defensive plays in here, discretionary, healthcare, are still strong, but you can see utilities took a hit, I think, as money was cashing out of there. When the defensive plays cycle up to the top of their historical norms, maybe that's just people cashing in those cyclic profits and then getting ready to reposition. That's my interpretation right now. World market models up next. Now getting a little mixed bag inside the U.S. We have been above average for the longest, but the Dow is lagging. Mid caps are strong. Some of the small caps on the growth and balance side starting to get weak. This loss in the Dow is coming from the energy components that were affected by that got their earnings smashed because of the oil. So the Dow is relatively more vulnerable than the broader S&P 500 and the NASDAQ, certainly. That explains that anomaly inside the U.S. Japan above average, Asia less Japan below average. Australia and India leading the way. China, Hong Kong, Singapore, Taiwan still doing well. Belgium looking good. And then a mixed bag here in the European countries. Are starting to see some differentiation. I think we've weathered the storm in the global markets. I think the oil play is now the new normal, or oil price, if you will. The ETF top 30 using the ETF2 model. South Africa, Canada, and then a mix of some of the financials like high yield corporate. This is at SCHB, the broad market ETF. So the ETF2 had to add 2 positions, so we chose broad U.S. and then South Africa. But a lot of new players inside here: Dow Jones Utilities, Natural Resources, Energy. That made a nice little rebound. So I'm becoming optimistic now on the energy sector as an opportunity. The Dow 30, you can see how it's really shifted. This used to be very, very strong, and now we've got a ton of new ones down here. AT&T, United Tech, Goldman, GE, Intel, Morgan. These are all affected by that drop in oil. And now we're left with Walmart and Caterpillar at the top of the stack. Going to shift to the daily report now. Then we're going to take a look at 5 different symbols. We're going to look at TLT, which is a channeling and an overreaction and an auto framer. We're going to look at Microsoft, which was a 10-day max pain, and also number 1 on the auto framer. We're going to look at Brazil, EWZ, and then we're going to look at our old buddy CLF as typical samples of how to frame some trades. I would look at EPP here in the overreaction system signaling a short. Again, I would take a look at, I would wait to see a mechanical entry rather than just auto buying it or auto selling that at the open, because I think the market is healing right now, and I would want to see evidence of a failure to get EPP, and then I would take that as a short-term trade rather than a long-term trade. If the market does continue to channel, and we would get a week of selling interest this week, then EPP would be the leading candidate. Martin, this is kind of unusual to see it this choppy. This is sort of typical of shorter term market waves. When you get long-term trending behavior, people tend to stay with their trade and the trend persists, and then you start to see a big difference in the 10 and the 30 moving average of the VIX. When you have such short oscillations here like we've had, that bit of a churn between risk on and risk off causes those two moving averages to get pretty close to each other, and so that's why we're not seeing a big oscillation. When you get these kinds of oscillations, that's a real set of trending behaviors that last, 6 to 8 weeks at a time. This one here, where it's got this little sideways chop, I actually treat that as a favorable condition, that it's failure to fail further. But yeah, this is relatively unusual. Looking at the auto framer now for the in the tactical summary for the Dow. Microsoft at 5.8, Intel 2.1, Merck 2.5 to 1. Got a handful of channeling and overreactions. We have a triple screen here in UNH. We got a handful of quality frog numbers. Nothing firing on the RSI2. So just a few to choose from here. Looking at the ETF 30, again, a handful of channeling and overreaction. That's basically treasuries, utilities, and real estate. So as the markets cycled up, these are those defensive plays that have pulled back, including relatively large pullbacks here in utilities and real estate. Utilities were down 4% on Friday and 2.5% in the real estate. Again, we got a handful of frog quality numbers that leap out at us, and then 3 silver, gold, and treasuries that all fired on the RSI2 being favorable. Oil had had a good day, and it's up 2% on Friday. Over the 10-day period, it's up 15%, and then 6% for 1 month. So you can see how it's turned the corner just in the way it's gone from extreme weakness on the 3-month, 6-month, and 12-month, and now it's gotten extreme goodness on one day, 10-day, and 1 month. So that's how the worm can turn. Looking at the auto framer, we're going to look at these top 3, Microsoft, Brazil, and treasuries. Look at our old buddy Cliff, no matter what. Microsoft is doing pretty good on this regression and fractal. This is a kind of a rebound value play, the ones that are on the top line. The symbols that are the most number of ATRs below their own long-term fair value, which we define as the RL270. So we're going to take a look at some of those. Okay, so the first trade frame we want to look at is Cliff. I just love this chart right here. It tells you everything you need to know about my style of trading. The fact that we can go from this solid support level over in here hugging the bottom of the river with an RLCO in here, and then coming up to test the Bollinger Band mean, and then breaking through it the second time, and then getting a Z trade outside of the river and the floodplain, and then how when that thing fails, it comes all the way back down to the bottom of the river to hold support, and it held support right where it held support before, and we've already had one little buying surge. It's come back in 3 days and now is holding support once more at this 6 1/4 level. And so this sets up for us a perfect critical state, because we can frame a strong or a favorable reward to risk ratio trade in both directions using range risk, which is simply this. So I want to be long at 650, I want to be short at $6, and my estimate is that as far up as this little bounce went, that's how far down it can go. So I'm looking at a move, it can get as low as 5. Even if it just goes down and tests 550 here, then that's a good short side trade. Then on the upside, we have price targets at the Bollinger Band mean, far side of the river, far side of the floodplain, and up here around this is that 10-day high. And you can see that it can make that kind of a move in a swing trade very easily, in the same way that it can make this kind of a swing trade very easily. So there's those are moves. For a move from 6 to 9 is a 50% move. That kind of volatility rewards your attention. Look how large the intraday ranges are. This, in my view, makes a perfect intraday trading candidate and short-term swing trading candidate. When it trends very strongly. It persists for days at a time, and it seems to respect significant price lows and highs around these round numbers. So to me, that creates a perfect channel for us to operate within our trading strategy. And I would just have you notice how the RL270 is it's right here at 650. It's been trying to move up against that. You can see this divergence from the RL10 to the RL270 is the same. That's how high it got here when it breached through that 270. So how far can it stretch from fair value? That's a measure, in my view, of how far the short-term guys can move it until the institutional money starts taking advantage, and that's a move from 750 to 9. You know, we're talking about a 30% move right there, and it's a short move just back to here. That's about another 20%. 20%. So CLF. That's the reason why this is one of my favorite trading targets. So what we have in review is a critical state. We have a favorable trade on the long side and the short side, a well-defined risk, solid support, which if violated yields a violent move down, and then measured targets on the way up, depending on whether you're intraday or you want to hang out for the swing. I think long-term fair price of 9 is about the upper limit of what can be achieved. But I love that critical state trade right there. Next one up is Treasuries. This is really a case study in how to manage winning positions too, how to interpret price action. I just want you to notice the dragon here in the middle. Let me put that up, pen. The breakout from the dragon that occurs here, and then price rides stays north of the edge of the river all the way up. We would get you get an RLCO signal to be careful on the upside, and here you get 2. These 2 dots tell you got to be thinking about the short side. if you play a 1, 2, 3 entry, or 1, 2, 3 exit, if that's the peak, then this is a 2, then an exit in here on this third bar is warranted. And certainly when it breaks below the dragon on that day, it's well warranted, and then you can cash a move in the treasuries that goes from 126 to 135. That's about an 8% move. I think I would not be surprised if treasuries came all the way back and tested 128. That's the RL270, the long-term fair value. I also want you to notice the extreme move here. This was another warning. The distance between the RL270, which is this purple line, and the RL10, which is here's the extreme move here. When that 10 starts rolling over, that's when you really have to be careful, because all the way up you see this stretch continuing. It's getting bigger and bigger and bigger, and then after an extraordinary move in the treasuries, that's the day when you are warned, and you should be shifting to profit preservation. So that's one way that I like to use that RLFF. In the meantime, let's look at this as a trading opportunity. I think a short from here, your target would be 128, next one 124.5. On the long side, I'd be looking at the RL90 and the bottom of the dragon, and the upper part of the river, and then a retest of the swing high. And then if it breaks north of this, that you would know it because the market itself would be cratering right there. I am more convinced by the downside and price than leveling off in this 128 region for treasuries. I think that's the more likely play. This is a sweet one in Microsoft. This was an RLFF to the upside. This was the, I want you to notice the distance from the RL10 to the RL270. Even where we are right now, this is almost 6 ATR. So if you can, if we get any kind of price improvement, you really have a Z trade also. You have a Z minus 3, and now you're entering at Z plus 1, or Z minus 1, and then your targets are the Bollinger Band mean. Let me clean that up a little bit. Here's your Z minus 3. Here's a Z minus 2. Here is Z minus 1. So if we get a price above that, you can buy that with the target at the mean for 1R, far side of the river for 2, long-term fair value around 48 for Microsoft, and that would be assuming a stop down here by the that's about an 8% initial stop, and that's consistent. And there's our little 2 dots of the parabolic stop and reverse, and you're using a full Z. That's what we call that, the Z trade. If you're looking at this as a from a pure Z trade perspective during the week, what we had was a 1, 2, 3 entry where you have a higher low, and then on candle 3 it makes a new high before it takes out before making a new low. So this is the purchase on this one would be right around here, around 42. But even so, we know from the stats that even an entry here at 43 with momentum is worth it in order to play a target of 45.25. Failure on this one, you could play that on a one-day failure with the idea of targeting 40.25. That would not be an unusual move to go down and make another to test that bottom. What's interesting about this one is that as soon as you get this price breakout above the gap down, now the next target in this vacuum of V, I think goes pretty quick to get up to test this area here, even to 45, or the Bollinger Band mean at 45.50. So I think a really nice trade in Microsoft is available. I mean, if you're a pension fund owner, you'd love to be able to buy Microsoft on 20% sale. This one is Brazil, and it showed some signs of healing after just getting horribly smashed the previous 6 months. We've got this extreme Z-3 trade down here, and it's really held well above that ever since. We got this support level here at 34. Has held twice, and a nice tight little doji here. And so now we have another perfect critical state where we can go long here or short here. And if it's short here, it's back down to 32.50. Whoa, sorry about that. 32.50. My mouse froze up on me there. Sorry. So if this fails, we're looking at this 33, and if that fails, you definitely want to be double short. Then if you're long here, you're going to be targeting 36, 37, 38-ish, and then we have a nice long move up here to long-term fair value around 40.80. All right, I think we got one more. Nope, that's it. That's 5 quality trade frames in a variety of indexes and large caps, and then some commodity-based stocks that I think should be of interest. I take the movement in Treasury as folks cashing their easy money and betting that the indexes are not going to collapse based on I mean, we're through the earnings season. People have gotten over the effect of oil on earnings and operations, and I think we've got a new normal now in energy, and it showed a nice little bounce and ready to go. So I think we're in pretty good shape in the equities right now. That's everything I wanted to cover tonight. I will have this recording posted. I'm going to put the trade frames back in the chat room here shortly, if you want to copy over the charts. But other than that, that's everything I have. Be on the lookout for the announcement on the blended monthly rebalancing competition for the summer workshop. Oh, Don asked me, what do I think about UCO and USO? I think oil's going higher. Let me see if I can pull it. I thought I had a chart on that, but I guess not. Hold on. Well, I mean, I like oil here. Let me get... Oh, I don't know about the end of the year. I mean, we're just talking January. My holding periods are pretty short. But here's a chart I just got done marking up. I mean, this you got real strong support in USO at 16 and also at 18. We've had that long trend down, and it's been breached twice now. 2 little spikes of buying already, and so I think it's pretty easy to label 16 as support if you're so inclined on the long side. Now take your pick for support at 18 or down here at 16. And then I would say a price breakout at 20, in other words, just above Friday's high is good. And if it gets above 2040, the next resistance level is up here at 22, and long-term fair value is 24 when it used to be up around 30. So you have a lot of room for this to grow and unfold. Now, does the move up look like this move down? I don't think so. But I think I'm going to operate on the assumption that 16 is a long-term support level until proven otherwise, and I'm going to trade it tactically in the meantime. You can already see that the volatility has started to decline with the way the Bollinger Bands have they've already started their pinch. So that tells you that it's turning also. The fact that we got the Bollinger Band pinch happening. So yeah, that's only 6 days of motion, but really, if you look at every previous 6-day period, there was no evidence of any kind of turning point. Even these little 6-day periods in here were simply trying to hold the support levels, and they couldn't. This was actual evidence of buying pressure here. So longer term, I don't know what it is, but tactically, I'm using 16 as a support level. Okay. Any other questions? If not, I'm going to stop the recording and get this posted. Thanks, guys, for your kind attention.